What is going on, guys? It's Ayadele here, and in this video I'll be talking about the GBPJPY trade that I shared 2 days ago. Was it 2 days ago? Yeah, it was actually 2 days ago. I shared it on the 8th of June 2023, and I mentioned that there is a potential 400 pips move on this pair. I talked about it, I explained it. I told you guys I was waiting to get my trade somewhere around here, right? Okay, you can see. So, what is the current status of the trade? That is exactly what I'm about to update you guys. And as you can see, we are trending nicely to the upside, as I mentioned in the previous video. We are about how many pips up? About 156 pips movement to the upside, right? So let's look at the breakdown of this trade and a possibility of a pullback or where you can actually get an entry from, right? You can see we are closing in on the 200 pips movement as I marked here. We are closing in, see, very close. We are almost at the 200 pip movement, right? And there's still enough opportunity for you to milk from this trade if you know how to get in. So let's get to break down the trade. So what happened is that right here I was waiting for the market to actually close up this gap, to come to this 15-minute demand here that you can see here. So for beginner trader, for you to spot the demand block, right? For me, I normally use demand blocks that breaks the previous level. You can see we have a low here. If you can see here we have a high here. Sorry, this is a high right here, right? Then we have this low here that actually gave a push to the upside that breaks this high. You can see that this high was broken right here, right? The market comes to this side, came down back around here, right? Then gives a push that breaks the market to the upside. We call this a break of market structure, right? So what you do is, like I mentioned in the previous video, in my EU analysis as well, I mentioned this several times. Most of the time, market will come back to that same block to actually get another push to the upside, right? Given that this block holds. If the block fails, if the block fails to the downside, then we have what we call a change of character. It's as simple and easy as that. It doesn't get easier than this, right? So when the market pulled here to the first time, right, I wasn't awake. It was, during this Asia session, and I couldn't take the trade. So I was waiting for the market. I didn't rush. Sometimes when you rush, you actually you make bad decisions. You wait for the market, let the market come to you. That's what you do. As a good trader, you're a sniper. You don't chase after the market everywhere. You wait for the market, you let it come to you. When it gets to the spot you're waiting for it, then you shoot them at that. You know what I'm talking about. So the market came back down almost to that level. You can see to that same level. So why didn't I wait for the market to actually, pull down back to this level before I took the trade? Very simple. If you check here the first time, you can see that the market has just about 4 pips to get to this demand level before it bounces back, right? So right there, we have what we call a fair value gap. We have a fair value gap right here. The gap was huge before and it was filled up to this extent, right? So there's every possibility that the market might not actually fill the whole fair value gap. It might not fill it completely down to this block, right? Given that it wants to come down to clear this previous Asia low, right? It might not fill this gap. So I decided to jump in right from here, which is just like, is within my risk management actually, just about 8 pips different, right? 8 pips different, and my SL is still within my my risk management, which is just 30 pips, a 30 pips movement for almost a 400 pips profit target. Yeah, so I'm going to take a little profit when it gets to 200 pips. That's nice. But what I'm trying to say is that sometimes you don't need to wait for perfection in the market. When it's coming to your zone or is about to get to your zone and you see that the pips or the what they call is not too much, or there is no enough volume in the market that might actually push it down to your block, you can enter your trade before the market gets to the block. Maybe 2-3 pips, 4 pips, or 6 pips difference to your block. It's not too bad. You can enter your trade, unless you're trading on the lower time frame where you need a very high precision rate. You just want to reach like 3 pips, 5 pips, smart money concept that doesn't, you want a higher risk to reward. You are risking, you just want the SL to be as small as possible. In this case, you can do that on lower time frame, but higher time frame like 15 minutes, 30 minutes, 1 hour, or something like that, when the market is very close to the zone you're waiting for and you have less volume, and also you notice that the pips, right, the pips that it remains for the market to get to your zone is actually very little, you can as well get into that trade and wait. Do you understand? The market might not get to the zone before it actually moves to the upside. So if we look at it, we can see that when the market break this, I already put this break of structure, what was it called here? This line, I've already put it there. I think it is in that video. Okay, let me see. I think I put it somewhere here. Should be in the video. If it's not here, then it should be on my social media. I actually put it there that the market is actually going to break this level, right? This previous recent high is going to break it to the upside, which actually means exchange of character. And you can see that perfectly breaks it, retested it. You can see, then it moves to the upside, right? Okay. Now look at it again here. If you're paying attention to this breakdown I'm doing, it can actually help you when you are trying to get into trades as well. Look at it right here. You can see that this level, the market actually breaks. Let's say this is a previous high. The market actually break it to the upside. And what do you notice? Look at this block right here. This block right here, the previous contrary candle right here. Look at it. You can see that the market eventually comes back to that block, right? It might not necessarily come back, but anytime you see the market coming back to the block, you can take a trade. It's not bad. Do not be fearful of the market. Let the market do whatever it wants to do. If it wants to take you out, let it take you out. Then you're going to look for another opportunity again. So you can see that the market comes back to this level. If you risk as low as just 13 pips, you could have targets, right? Maybe around 74 pips, which is a 1/5 risk to reward, which is a very, very good risk to reward ratio, right? So what am I looking at next for this market is that I might be expecting a pullback at some point. Well, for now, I don't see any reason why the market should pull back, but if there is a pullback, fine and good. I'm expecting the market to react somewhere around here. If it does break, then it might get back to this zone before we continue the movement to the upside. But as I said, I'm going to take some profit off this zone. If we get there, I took some profit, and if the market decides to come down to the downside, breaks anything it's trying to do, I'm going to look for another opportunity to re-enter more positions. I'm not going to liquidate all my positions because I know very well that this market is still going to this level I marked here, 178.173. The market is still going to get there. So at any point in time, if you have the chance to scale in this market, when you have a pullback or anything like that, get into this market, long it, and just set and forget, and be hoping for the best. So I just decided to do a quick update on what is going on with GBPJPY. So I hope you guys are making money off the market, and I wish you a fruitful week ahead. And I'll see you in the next video. Goodbye.